Welcome to Futures Now. I'm Jackie DeAngelis. We are coming to you live from the commodity desk at CNBC Global Headquarters. Here's what's coming up on today's show. Oil is holding over $66 a barrel, and veteran technician Louise Yamada says there's one chart that actually shows that the commodity has more room to run. She's going to break down the charts for us later on in the show. Plus, Bitcoin bouncing back above 8,000 on tax day. And one of our traders says an even bigger rally is coming. He's going to give us the trade later on in the show. But first, let's take a look at stocks extending yesterday's rally with all three indexes hitting their highest intraday level in almost a month. Jim Uriel and Brian Stutland are your traders today. They're breaking down the market moves. Jim, let's go ahead and start with you. The airstrikes over the weekend appear to be an isolated attack, and you've got a string of good earnings, so everything's great again, right?
So, yes, in a nutshell, it seems that way. We shook off the bombings. The numbers yesterday, the retail sales number, and we had worried about retail sales the last couple of months, and all of a sudden that was a fairly solid number. But looking out at earnings, we believe this is going to be relatively blockbuster. I think there's a lot of things to like right now. From a technical standpoint and a long-term chart, we bounced off a trend line. We've gone back above the 200-day moving average. We'll probably settle above the 100 and the 50 today as well. There's a lot of things that I like.
Okay. Your take on the markets, Brian?
Yeah, well, I like it too. You know, when you look at the market and you look at volatility in this market, we've had a tremendous amount over the last couple months. But yet hedgers, those playing the VIX and S&P options, have continued to sell puts into any sort of sell-off. Every time the market traded down to 2,600 on the S&P, we saw the VIX at a lower level. And in fact, before yesterday, when the VIX was basically, or the market was basically unchanged month over month, we saw the VIX down significantly. Yet there's a ton of volatility back and forth in the marketplace. So to me, that says hedgers are willing to take off their hedges. They're willing to play longs to the upside and continue to see this move higher here. And listen, we've gotten now this quarter coming up of probably pretty good earnings, probably next quarter, and maybe even a third quarter of really good earnings for sort of the market to play catch up from the highs that it made in January. And that's now allowed some of the multiples to decrease, in which we saw at the beginning of the year, to play catch up. So I certainly think the market can continue to move higher.
Okay. For more on the markets, let's go ahead and bring in Christina Hooper, Chief Global Market Strategist at Invesco. Christina, always great to see you.
Great to see you, too.
So we mentioned some of the topics, right? Earnings are dominating investors' attention. Geopolitical threats are on the table as well. What do you make of everything that's out there right now?
I think it makes sense that investors are focusing on earnings. They're very tangible and they're close at hand. So for the next few quarters, it looks like earnings are going to be strong. And so that makes sense that there's an upward bias to stocks right now.
Okay, I started the show by asking the traders somewhat sarcastically, saying, you know, the geopolitical threat with Syria over the weekend, it was an isolated incident, so the markets are now brushing it off. But you say it's not something to brush off just yet.
We don't want to brush off geopolitical risks. We want to segregate out those which are important from those which are relatively unimportant. And what we know from experience is that most geopolitical risks don't impact markets materially over the longer term. But there's one exception to that rule, and it's protectionism. And so while markets seem not to be concerned right now about any impending trade war, we have a lot to be worried about when it comes to that potential.
What do you think, as we move forward, the most important issues are going to be on investors' radar? You know, there's two views, that this market continue to go higher, or that we've been ready for quite some time for a larger correction than we've seen.
I don't think we're going to see a big correction anytime soon, although I think we're going to see some very significant volatility. There's a tug of war going on right now. Earnings and some strong economic data are certainly providing a strong positive bias. But there's also downward pressure on stocks coming from the potential for the FOMC to be more hawkish. And so that tug of war is going to play out and create an environment of increased volatility. And add to that, of course, that geopolitical risk mix, which will be thrown in every now and then and which we can't control. So over the shorter term, while I think the bias is upward, I think we're going to have to fasten our seatbelts because it's going to be a bit turbulent.
Christina, price target on the S&P?
I wouldn't be surprised if we get to 2,800 by year end. Now, that may sound like I'm being pessimistic. We could certainly go higher, but I think there's definitely a cap at about a 10% gain this year. And again, we're going to have to work a lot harder to get our returns this year. We're going to have to put up with a lot more volatility and risk to get there.
Jim, question?
Christina, you mentioned protectionism. The new economic advisor that was hired, his motto is free market capitalism is the best path to prosperity. When you look at what they're trying to achieve, and they're using the threat of terrorism to actually break down trade walls, is it still fair to characterize them as protectionism? Or in the short term, are you saying they will really go through with this if people don't change their ways?
Well, I think we have to parse out the administration's different focuses when it comes to trade wars. I think very much the intellectual property rights issue is a valid one. However, I would argue it should be pursued through the WTO. Now, the trade imbalance that has also been a focal point of the administration, that imbalance with China, I would argue is not something that we should focus on and should not be the source of tariffs and retaliatory tariffs. I think it's a lose-lose situation.
Okay, Christina, so if these beginnings of trade wars flare up into something bigger and more tangible, and all of a sudden the stocks give up the ghost, how far do you think they could go lower?
I think we could see another sell-off of about 10% or less, or a little less. But I think there is a very real threat there. Keep in mind that China has an arsenal of tools in a possible trade war that are non-traditional. It doesn't have to be retaliatory tariffs. It could be devaluing renminbi. It could be, in fact, not buying any more U.S. treasuries or selling some U.S. treasuries they currently hold, jacking up our borrowing costs. So there's a lot at stake.
Christina, great to see you. Thanks for your insight.
Thank you.
We'll see you soon. Jim, let's get straight to it. Trading the S&P out of that interview, buying, selling. What's the plan?
I hate when someone makes a very compelling argument against my current thought process,
okay,
but I'm going to stick with mine anyway, because I liked the thing she was saying. I think if the June trade's 27.09, last time I looked at the board it was 05, so 4 ticks above it, I think that's going to be a breakout of a few 10-minute bars, and I think it'll prove some short-term momentum. I think that's a spot to buy it at 09 with a target of 27.33, a stop place below 26.92. And again, if we get 10 quick ticks in this trade like we have a couple times before in some of the trades we've talked about, it's time to move your stop up probably to break even and see what happens there, because as long as you're playing with house money, it's probably best not to go away with a loser.
Okay, Brian, reaction to that?
Yeah, look, in an expiration monthly week here, the market's on a roll to the upside. I like the trade playing the upside, especially if we move a few handles higher and stop in and buy like Yurio talked about. I will say, one point that does worry me a little bit about the market, forget about geopolitical. I'm looking at the LIBOR, the spread between overnight lending and the Fed funds rate. That has widened out, not that we haven't seen this, all the way back till May of 2009. So why are banks having trouble lending overnight to each other relative to the Fed funds rate? That concerns me. I think that will create some more volatility in this market. Maybe it might be volatility to the upside, but it will create some more volatility. So you got to be careful as you play this to the upside, especially after a big run we've had in the market. But I am still overall pretty bullish.
All right, let's get the risk reward on this trade. Jim is buying the S&P 27.09, targeting a move to 27.33. In this trade, each point is worth $50. He's risking $850 to make $1,200 on the trade. All right, moving on, let's talk about crude oil, rallying over 9% this year. And our next guest says oil's got even more room to run. Louise Yamato joins us now to tell us what she sees in the charts. Louise, it's always great to talk to you. Want to get your perspective, because everybody thinks now that the tensions over Syria have somewhat calmed. It was an isolated incident. Crude should go down. So you're making the opposite case.
Well, the opposite case has been in place ever since we saw the slight breakout in 2017, and we were wrong last month when we expected a counter-trend move down. It didn't happen. Your traders were correct on that, and it's been inching up. I can't say it's necessarily going to rush. This whole rally in oil has been a very slow-moving 6-month process, but we do have measured targets from a Head and Shoulders that's been in place for 3 years that could take us to 75.78, where you run into the major resistance from the 4-year breakdown in 2014. So there's a possibility that it continues to move higher. I would say if it comes under 60.59, then that's our stop loss.
Okay, so that's a key level to watch. On the upside, as we're heading into the summer driving season, demand is supposed to pick up. Some traders are expecting us to cross through 70. How quick do you think that could happen?
It's been such a slow move up to this point that I hesitate to make a time frame for it. But if you can hold here, having come out of this tiny little consolidation, at around 66, 67, then perhaps you could make it by summer.
Okay, Brian, jump in.
Yeah, Luis, on a technical standpoint, the move from 56 lows a few weeks ago to where it is now, that violent move in my mind was more than just geopolitical. How much does that carry over to trigger into that $70 level that we just talked about? Is that going to continue the momentum very strongly, or is there any risk to the downside at this point?
Well, there's always risk to the downside, but I'd say you've come out of this consolidation that's been in place since the beginning of the year when crude lifted through 60, 59.60, as you mentioned. And it's trying to push out. So if it can hold, I would give it short-term level of 62 if you want to wait and not go down to 60, but I'd say if it can hold above 62, 63, then maybe we should see it continue up. Hard to give you a time frame.
Louise, are we out of the days where we saw 3 handles, 4 handles on oil because of overproduction? Do you comfortably feel that that's over and we're in this new range over 50 for some time?
Not necessarily. I mean, I'm impressed not only with the production, but also with the use of alternative energy that's moving so quickly that I think that's part of why maybe energy has been moving slowly, having just, moved up from the mid-40s a year ago. So there are headwinds for oil, and also remember that it's been down almost 80% since 2008, and then again from the 2011 high. And I think if you were to get to these targets, you're going to be running into the resistance of that 4-year breakdown in 2014.
All right, Louise, great to talk to you. Thank you.
My pleasure.
Talk to you soon. Brian, let's get to you. You have a trade for us, too. You think oil is going higher or lower?
Yeah, I think it's going higher. The May contract in crude, I'm looking to buy it 65.95, which is a little lower than where it's trading right now. So if we back off a little bit, buy 65.95, looking for a trade up to 67.15 with a stop down at 65.50, which is kind of a tight stop. We may trade lower to that 62-63 level that Luis talked about, so that's why I have a tight stop on it. But certainly playing crude to the upside, I mean, I think it's more than geopolitical, like I started to say a few minutes ago. I think what you're seeing right now is drawdowns in supplies. I think you're seeing demand pick up. I think the situation in Venezuela with so much supply coming offline there, and couple that with U.S. supplies dropping, coming out of Cushing, Oklahoma, I think there's a real demand picture that's driving oil higher. We don't go from 56 to 66 as quickly as we did if we don't have some other factors going on besides geopolitical, and I think that's pushing oil higher.
From a longer term, I agree with a lot of things that Brian's saying. I'm agreeing with a lot of things that Louise is saying, too. But the last 2 days, crude butted up against significant trend line resistance on the 6-month chart. To me, it seems like it turns back around and trades 62.5. That's the spot to buy it, because I will acknowledge fully that the trend has been higher for the last few weeks, but I think within that trend it's going to bounce back and forth, and the way that it was turned around makes me think that now is not the right time to buy it, but sometime soon will be.
All right, Brian, final word.
Yeah, that's why I think I have a tight stop here, so I'm only risking a few $100 here. We get stopped out, then I wait for that 63 level or so to buy back in at that point in time, but that's why I have that tight stop.
All right, let's get the risk reward in this trade. Brian is buying crude oil 65.95. He's targeting move to 67.15. Each point is worth $100, so he's risking $450 to make $1,200 on the trade. Let's end the show today with Bitcoin bouncing back above 8,000. Jim, you say it's about to rally even higher. This one's been a tough one to call. What's the trade?
Well, first of all, I'm not one of you, to the people out there, the Bitcoin crazies, just because I think it's going to go higher from here. When we were on the show the other day, Grizz made a good point. There have been a lot of regulatory headlines, and Bitcoin held in. Now I think if it trades 8,200, a little bit above where it is right now, I think that's a spot to stop in with a target of 9,400 on the downside. A stop placed below 73.90 would be appropriate for this structure. Again, to me, everything has a price, and despite the fact that I come in here week after week and say that people are confused with falling in love with blockchain and are using Bitcoin as a proxy for that love, I still think that exists. But within that framework, it still can have some pops, and I think this could be one.
Stetlin, what do you think?
Yeah, I really like this trade because I think what we're seeing going on is sort of a bottoming process that we saw in Bitcoin around that 7,000 mark, plus or minus. And now we've all of a sudden out of nowhere, we had that 11-12% pop the other day. And I think that's going to allow it to sort of take off on a technical basis to trade higher if we get that 8,200 level and move significantly higher from there. I think what we're also seeing is transactions taking place on the blockchain are continuing to increase. I've been told that Coinbase made about $1 billion in revenue on transactions. So that's going to continue to pick up. That's going to provide liquidity into the system. That's why we're seeing volatility start to compress a little bit in there. And I think this is sort of a bottoming process we're seeing where maybe now blockchain is going to finally catch on and take off a little bit to the upside.
One of the things that I would like to underscore that Brian said is that 11% move it had the other day, and then it didn't give any of that back. It's kind of hanging in pretty well. Yeah. That's why I think there's underlying strength. All the other stuff about, we're going to see Bitcoin's going to dominate the world, we're going to see transactions, I'm not sure I believe any of that yet. I'm just talking about within the next week or so, if fear of missing out might force people to chase this and chase it up to 9,400 is my thought.
Fear of missing out.
Yeah, we just need you to have that open up that electronic wallet here and get into it a little bit for you to start to feel it. And then maybe you'll start to believe.
And Litecoin, but I just mostly wanted to see how the whole system works. I'm interested in it. My interest is peaked. I think blockchain is something that's here to stay. I'm just never sure that Bitcoin is the way we're supposed to trade blockchain. Blockchain is not as sexy as all that. I don't think it's going to happen that way.
All right, let's get the risk reward on this trade. Jim is buying COBOE Bitcoin futures at 8,200, targeting move to 9,400. Each contract, 8,200. So we're risking 800 to make 1,200 on this trade. All right, that's going to do it for Futures Now. My thanks to you out there and also to our traders, Jim and Brian, today. Meantime, if you missed anything, head to the website, futuresnow.cnbc.com. Everything is there, and it's all on demand. And for the latest headlines and a sneak peek of what's coming up on the next show, be sure to sign up for our newsletter at cnbc.com/Futures Now email. You can find a link to that and real-time trade updates on our Twitter account at CNBC Futures Now. Otherwise, we'll see you for our next live broadcast Thursday at 1 p.m. Eastern, right here at futuresnow.cnbc.com. See you then.